Hello and welcome to DigiTales, episode 18, season 2. My name is Faizan Syed, founder and CEO of East River. And today I have someone very interesting to talk to who's going to talk about the venture capital landscape in Pakistan. He is an early stage venture capitalist who has prior experience in investment banking at Morgan Stanley. He also worked at the Sovereign Wealth Fund in Singapore, raising sovereign foreign reserves for Singapore. But in 2018, he came back to Pakistan and launched Sarmayacar. And in the last 4 years, has managed to get 19 businesses invested, including businesses like Patari, Bykea, Abhi, and Jugnu. His name is Rabeel Warraich. How are you today, Rabeel?
Thank you very much for having me here, Faizan. Very excited to be here and good to see you after a bit of a break.
It's been a while. It's been a while, and I think we've both been fairly productive during this time. You a lot more than I.
Well, I don't know. Let's see. Hopefully, like that productivity come to something. But I think the ecosystem has really changed over the last couple of years, and so we're having to run just to stand still as well. So it's an exciting time.
That's great. And I noticed that Pakistan, and everyone's been quoting these headlines, the greatest amount of investment in Pakistan in history, hundreds of millions of dollars. But when you look at the economy, there's a lot of sort of counter arguments as to why the investment is coming in, whether it should be coming in. Is Pakistan ready? Because when you look at the GDP per capita, we're still under $2,000. When you look at the population demographic, yes, we might be over 200 million, but how many of us are actually 3G, 4G data equipped? It's only maybe 40, 50 million daily active users. And so with such a limited number of users, with such a low GDP per capita, can you really build an ecosystem for startups that can scale? Is what we're seeing a lot of hype?
Very good question, Faizan. And I think whenever you're assessing the attractiveness or the opportunity within an ecosystem, you are trying to extrapolate from some of these metrics that you've mentioned. Of course, GDP per capita is really the underpinning of any economy, and any new business that is coming up needs to take into account that. But I think for the opportunity in Pakistan still remains fairly sizable because, again, the demographic dividend in the country is enormous. And while the per customer or the per user value that you can generate might be lower, by the same token, you do have lower customer acquisition cost for them. So ultimately, as long as the ratio holds up of lifetime value to customer acquisition cost, I think there is an opportunity to go after. What is really the trend that we're all trying to play, and again, if I may simplify it, at least in terms of my own understanding, I think it's really the consumption patterns of a very large, young, and consumption-oriented population are moving to digital-first avenues. And I think over there in that trajectory, we're still fairly early by some estimates, where if you look at overall digital penetration within the retail space, we're maybe at 1% versus India being close to 5-6%, and some of the countries in the West being close to maybe 15-20%. So there's a lot of potential still if you look at that measure. If you look at another measure, which is just venture capital invested as a percentage of GDP, we're still way off from, let's say, a comparison to India or even Indonesia or some of these other ecosystems that have come up in the last decade or two. So there is a lot of opportunity there. The question remains, like, as an ecosystem, what are the next steps, and what will get this recycling of the capital that we need for an ecosystem to thrive, and also unlocking of local capital, which resides currently with, like, a lot of big conglomerates and families in the country. But how does one get that invested into the economy at large, but more specifically in the venture capital space? And I think over there, what we're really hoping for is like, the first wave of exits to start happening. And I think that's going to be like, a key next step for the ecosystem. But overall, if you look at the opportunity on the one side, I do contend it's still a large one, even if you take into account just some realities of, for example, just to use one example, most startups are focused on Karachi, Lahore, Islamabad. So when we talk about the 220 million population, that's not exactly like, the immediately addressable market. I think more or less it's maybe 45 to 50 million, which are in these three metropolitan areas. And then within that, you need to see what kind of smartphone penetration there is, mobile broadband penetration there is, and how many of those are actually transacting customers. In some cases, you do have evidence that startups are getting that underlying traction. So sorry for a shameless plug, but one of our portfolio companies, Bykea, has north of like 700,000 transacting customers every month. And that just gives you a sense of like, the opportunity to scale the right kind of solutions is there. What is tricky is really to find a business model market fit, meaning can you make money and survive and continue to grow based off of a small sliver of a low or average order value, whatever segment you want to look at, or like, what the average booking value of any of these services is. And I think that's where we still have to find more progress. So we have to progress more, and we have to find out which models really work in the country and which don't. But I think at an aggregate level, the opportunity still remains quite interesting. And because there was quite a mismatch between supply and demand of venture capital, that's why globally, Pakistan is seen as this really attractive avenue, which is relatively untapped from a venture capital investing perspective. And I think that's what drives a lot of what has driven a lot of the recent attention, particularly in the last year, and the significant step up in VC getting invested in the country.
And I think that, to your point, I think the fact that, let's say, if India is at a certain percentage and Pakistan is behind, it's very easy to draw the parallel and say, okay, well, Pakistan will catch up and be at the same level as India. But the problem that I see is, at least is just a view, is because our GDP per capita is low, only investments like Bykea can survive, right? Because if you think about it, there are 700,000 transactions every month, right? 700,000 transactions. Sorry, 700,000 consumers, correct.
Consumers, yeah, that are doing more than 5 million transactions a month, actually.
Correct. So 700,000 consumers every month. But if you look at the average order value, right, on Bykea relative to, let's say, an e-commerce marketplace, right, it's significantly lower. So for Bykea to really get those gross merchandise value, the GMV numbers, for its valuation to sort of reach those levels, it really needs to scale. And so the question then arises is, should investments in Pakistan be focused on Bykea-like businesses that are going after these very small share of wallets because that's all that the masses can afford?
That's a good question. And I think the first wave of investments that we've seen have been primarily in what we would describe these infrastructure-like investments. A lot of it focused on logistics, some payment tech, all of these enablers for traditional e-commerce effectively. And I think the reality is that we can't escape the GDP per capita or the earning capacity of individuals in the country, and hence as a result the spending capacity of those people. What I would say as a response to your specific question is that I think every sector has an opportunity to drive some efficiencies by leveraging technology, and as long as you can do that within some unit economics framework that doesn't completely assume a change in consumer behavior or consumer spending patterns to make such a opportunity viable, I think there's fair play in experimenting with what can and what cannot work. I think in another way, what you insinuated is right, which is that maybe some models don't work in the country. And I think we're clearer about that assumption than about being able to say, okay, we're 100% sure this will work. Because I think what are some of the localization requirements in the country that can add some costs, but in other cases that can also help create a certain moat for local startups, which allows them to compete against international players. So over there, the economics are one consideration, but it's also just the fit of the business model for what is needed in the country. It becomes also very, very crucial. In some cases, we do see some temporary subsidization of the growth initially, bought growth, because the economics are not what you would expect in that sector in the steady state. And so to all capture market share, certain startups might be spending a little bit more discounting to just get more GMV or scale, so that they can either get better margins on the back end, or kick this can down the road of figuring out where unit economics are going to start being in the positive territory. So those types of models, really, it's our job to look through that and take calls on which models have a better chance of success. And but I think it's difficult to rule out, at least when we're comparing to India or some of the more comparable landscapes as Pakistan. Again, you can go back maybe a decade for that comparison with India. But I think it's difficult to say that, okay, something that has worked in India will not necessarily work in Pakistan, because the psyche of the people was very similar. And in fact, we were meant to be one subcontinent before our independence, and so that would allow, that would suggest to me, at least, that a lot of those patterns are going to repeat. And the question is, can we leapfrog some of the learning from ecosystems like India's? Because mistakes that have been made and money that has been wasted should not necessarily be done again, just in the name of experimentation. But there's certain also differences that we do need to test out and see which models really take hold in Pakistan.
And one of the models that is really being tested at this point in time, which seems to have worked in India, is the marketplace model. If you look, everyone seems to be jumping in some sort of marketplace, right? Do you think the marketplace model is as viable a space for investment as it is in India, in Pakistan? Because if you think about it, for an economy that doesn't have significant purchasing power, and let's take a look at a few examples, right? Like Munchies was, I think, launched by Unilever. That platform for quick commerce doesn't seem to have really taken off. There were some early e-commerce platforms like a homeshopping.pk that focused on electronics that got beaten out by the Raz. The Raz is really playing the whole sort of pricing game to acquire market share. So is the marketplace model a really viable model at this point in time in Pakistan?
Yeah, I think, again, good questions, Faizan. In a way, the Raz is a marketplace model itself, right? So we can maybe talk about relative performance of some of the
But it's
players.
heavily subsidized though, right?
It is correct. So that's my kind of contention around it. That can you make it work? If you had normalized margins and normalized pricing, and I think some of that we just have to also see play out. Again, with the Raz, they have enough scale that they're able to now at least achieve certain volume, but they're nowhere near to breaking even, let's say, on an aggregate basis, given the kind of spend they need to do to just both lift the overall e-commerce market in the country, provide the kind of logistics that people are wanting to benefit from, and be able to make sense with the margins on the small denomination of or the small average order values that are available. It's I think there will be companies or startups that are going to achieve that. Whether or not the Raz has already done that, I'm not so sure about. There are other models where I think structurally Pakistan offers a bit more challenging opportunity, that I think I have less confidence in those models working out necessarily. For example, any 15-minute, I'd say even 20, 30-minute delivery platforms are just difficult to execute on and to meet those kind of SLAs, because even if you're operating a dark store, you need to be within a certain radius of the individuals that are placing orders, because the amount of time you have to just pick and pack and then have it delivered means that you can't really optimize for a number of orders per delivery. And also you need to have that inventory already purchased and available in one of those dark stores that you have within a certain radius. So that just means that the capital requirement for those businesses is higher structurally, like, given our roads and like the other challenges around deliveries, whether that can be possible or not. And so if you're subsidizing such models for an extended period of time without seeing any visibility of like break even or cash flow generation, those are the models that we're starting to have less confidence in. And I think we saw a lot of investment going into that sector off the back of like global interest in the space.
Right.
But I think that a lot of this ebbs and flows. So it's not necessarily that like sector that was hot a few years ago continues to attract investment for the foreseeable future. We saw this with ride hailing, which is no longer the flavor of the month. I think maybe this year the whole quick commerce thing not working out, and that then translating into fewer financings into those segments, I think is going to start to happen. But I'm not ready to say that like Pakistan cannot have a solution in each one of these spaces, as long as it's normalized based on kind of like the prices that are available,
Right.
or that are possible, and also a certain scale which just drives your unit economics a little bit better.
But the math does not work out on quick commerce. I mean, if you look at an average basket, right, of about, let's say, 500 rupees, for products that typically don't have a very high margin, FMCG products are like high single digits, maybe low double digits. Or even if you take, let's say, a 10 to 15% margin on a 500 rupee basket, you're looking at what, 50 to 75 rupees of what you're earning. And if your delivery cost, the rider cost, the motorcycle, the maintenance, everything works out to, let's say, even if the delivery is at 60 to 70 rupees at a minimum, I mean, you're not really making money. At 50, you're making a loss every time, no matter how much you subsidize it. It doesn't make sense.
Agree 100%. And in fact, I'd say we believe so much in what you're saying that we haven't actually invested in any quick commerce play, because the economics just don't make sense.
Right.
I mean, you mentioned like maybe mid-teens type of margins, which are also already very difficult to get
Right.
in FMCG sector. Generally, the cost of fulfillment, as you pointed out, is not so insignificant that when you take into account just the gross margin you're making on some of these deliveries, it's you're starting underwater already. So how do you layer on a significant delivery charge, which then on top of what is a low average order value, just basically is going to start pricing people out. And I think
Right.
the key differentiator there is that people are still doing their impulse buying of these quick commerce platforms. No one is getting their monthly groceries really
Correct.
from these places. They're still going to the Imtiazes, the Al-Fatahs, or maybe the metros,
Yep.
because that also makes for a bit of an outing for that family, or like gives them an opportunity to just go out together and do whatever monthly shopping that they need to. Whereas tail end items are more likely to be ordered through platforms like these. And the stats that you're sharing are like very interesting, because there's a study not too old, like I'd say maybe a month or so, which looked at a lot of European platforms that are doing the same. And the assessment was that you need an average order value of about 40 euros out of Europe, and then charge a €2.5 delivery charge on it to make it break even in places like Europe, with the margins that they have available, which might be a little
Right.
bit higher than Pakistan. Granted, a big cost for them is the human capital that they're employing, which is a lower cost in Pakistan, but you cannot drive that cost down to zero, or the others down so low that you can make it work with the kind of average order values that you mentioned and the margins that are available in the country. So completely 100% agree with that, with your hypothesis. And we would, in our case, at least take a step back and say like, okay, let's see which models can get traction, and if they are getting traction, they will still need funding in subsequent stages as well. So maybe it might make sense for us to participate at a later stage, when we have a little bit of evidence of the model working out or not.
So where do you see which sector is ripe then for disruption that makes sense, unit economics, on a scale level? What's top of mind for you right now?
Yeah, I think it's a broad brush statement I'm going to make, but I think fintech more broadly, and then within that, I think we need lending solutions for like the retailers, merchants that we're a lot of these platforms are working with, but also individuals and consumers. In a way, Abhi Finance, which is one of our very strong performing portfolio companies, is a solution in a market which is facing inflationary pressures and does not have ready credit available for consumers. Being able to access your earned wage on a more frequent basis than monthly is already offering very attractive value proposition to customers. So now if you imagine the capacity that gets enhanced of these retailers, if they have the ability to order some of the FMCG products that they're doing through platforms like Jugnu or Bazaar, to be able to get those on credit, they can increase their own velocity, because oftentimes their limiting factor is also the working capital that they have available.
Right.
And so we think broadly fintech, but within that, lending, I think, is an interesting area. A lot of work is being done, but early stages. So I think the opportunity size versus the traction we have so far, I think there's still a bit of a mismatch.
So when you say fintech, what comes to my mind is that you're looking at a sector that is completely digital. There's no human intervention, there's no warehouse, there's no logistics, there's no delivery, there's no bad roads. The entire transaction from end to end happens digitally, right? So if that's the case, then why not look at, let's say, casual gaming as an industry? We've got talent here, developers, or anything that's related to development of whether it is content, whether it is games. Has that sector not really taken off in Pakistan? And then we can go into the Web3 and so on from there.
Yeah, I think that's a good observation, because I think there's one difference is when we look at opportunities. One is like, where is the addressable market in Pakistan, and can you monetize your offering, versus what is the potential offering for the world, and you can monetize that in a different way, obviously, also in areas where there's higher capacity to pay. So gaming, for example, I would use as a good example where the two can look very different. How effectively can a locally produced and published game be monetized with just a local audience is a question, and B, whether Pakistan, with the gaming talent that they have, can they make global facing games and be able to monetize that globally, so have effectively a Pakistan for the world offering. I think that needs to be looked at separately, and I believe there's an opportunity in both, but maybe the latter has a little bit more of an actionable opportunity in the more near term. And one of our portfolio companies is actually doing really well, called Revolving Games, where they have a studio out of San Francisco and also out of Lahore, and they're making some big IP games for together with global publishers. And I think when they do their economics, they're looking at a global market, and so
Right.
the propensity for people to pay, and also just the ability for them to transact, given digital payments are ubiquitous globally, but maybe in Pakistan it remains still a little bit of a challenge of how you would be monetizing some of these games. But your observation is the right one, that there are sectors which are just fundamentally more attractive because of the economics and the margins being better there. And I think gaming is certainly one of them, if the game works, of course, because you often have to spend a lot of money upfront to develop the game. There's other sectors as well where I think apps, when you move away from the logistics side of things, because everything initially was just logistics, really.
Yes,
E-commerce, call it whatever e-commerce, but effectively
it's a logistics play.
About getting a product from one point to the other, and putting maybe a digital storefront, in the form of a website in front of a consumer. So even when we look at Davai, which is the largest e-pharmacy in the country, it's really a pharma logistics business, because it's in a price controlled market. You have to work with distributors, you have to think about a manufacturer's considerations around cannibalization of what they believe is a working distribution system in the country, but it's effectively quite broken. So it's about figuring out those types of solutions. But now I think going forward, there are sectors which still haven't seen as much disruption as I would have imagined, or I think the opportunity offers. Education is one of them. I think during COVID, people did adopt online learning solutions like after school tuition programs, etc. But I think we're just literally scratching the surface there. Baiju's, which is in India, is more than a decacorn now, and we I think are maybe off by thousands of factor, rather on that trajectory already. But I think this will come in the future. I think there's further opportunity around health. We have multiple different platforms, but the combination of everything from electronic health records to their automatic disbursement by pharmacies that are linked to that customer having gone through a certain process or onboarding to a platform through which they maybe booked the appointment to begin with. So I think a lot of those opportunities still remain, and even I mentioned fintech more broadly in the context of lending, but we're only starting to see buy now pay later type plays in the country, and I think there is going to be other variants of that, where other verticals that are niche or specific to a certain type of customers, they might start experimenting with those kind of things as well.
You're talking a lot about the logistics and how everything seems to be a variation on logistics, what was hot, right, for the longest period of time. But your first investment was Patari, if I recall correctly. Yeah. How has that investment played out for you? Because it was not logistics, it was completely different. It was content consumptions, maybe subscription based, a test in the Pakistani market for an audience that is used to consuming free content all the time. How did that play out?
Very good, juxtaposition of what that opportunity, what the hypothesis of that opportunity was, and how it kind of actually played out. And I think you answered the question in your comment, which is that monetizing that in a country like Pakistan proved to be very challenging. And while people like the convenience element of having most Pakistani music in one place and having other audio offerings in there, but to build up a subscriber base was more challenging than we anticipated, and the company had to again rely on means of making money through other kind of sponsorships, and assisting with actual music creation side, rather than just being a distribution platform, which is what it was originally intended to be. So it's been, from our perspective, it's been performance as an investment has been a little bit disappointing. With that said, the company has built up a certain brand appeal, which still continues to resonate with both people and artists, and we haven't given up yet fully. I think there are possibilities of merging with other players that can provide some ammunition to the company to then go out and build a subscriber base, maybe in combination with video offering as well, or some type of other platforms that might broaden out the offering and make it a little bit more easier to monetize. But your observation is nonetheless correct that what our hypothesis was, that this is a higher margin distribution play around content, and you want to really play the role as the middleman. That did not play out as we originally envisaged.
So I have a view, right? My view is that a good, successful startup is a combination of the right number of pivots and a driven entrepreneur, right? What, in your experience, I mean, you've seen a number of business, you've seen more business, you invested in 19, I'm sure you've seen way more, right? In your view, in Pakistan, what makes that right-driven entrepreneur? What are those traits? Is it the foreign education? Is it a local education? I mean, what is it? Is it? something that none of us have seen yet.
Yeah, no, I mean, and that's really like, what our job is effectively as well. And sometimes we get it right, sometimes less so. And every entrepreneur is different. So we've gone over, I think we've reviewed over 1,500 situations since we began in
That's
the
a
company.
lot.
And you'd be surprised that there are some similarities between people
Right.
that make it beyond a certain state and the ones that don't. I'd say I'd really want to start by saying, like, first and foremost, you need grit and resilience as an entrepreneur in Pakistan, because a startup is difficult in any ecosystem, but when you layer on some of the structural challenges in Pakistan and the lack of experience of like many individuals around you, because we haven't as an ecosystem gone through that full cycle, you just need a lot more like of that grit and perseverance to pull through. But that's not enough alone. You need certain charisma, because you need to get people excited to come onto your journey, and also accept the fact that they will probably not make the same economics as you will as a founder. But every successful company in the world, in the history of the world, has been made by people. No company gets
That's
made
true.
by themselves. So someone who understands the notion of investing in people, but then can also translate that into attracting and retaining talent. That's a very important skill. Another skill, I think, in the context of Pakistan is also like be an articulate storyteller. I think a lot of times the perception reality gap that the people that haven't lived in Pakistan or haven't been exposed to the country as much have is that maybe people like or entrepreneurs in Pakistan might not be as equipped to raise kind of like follow-on financing, etc. And for that, you need to be able to tell your story and to be then focused on executing against it. So the perseverance, the grit, the patience in many ways, and the ability to like again attract talent helps you on the execution side. But then you constantly need to be able to tell that story to get the financing in place or get the right
Right.
partnerships in place to be able to move forward on that.
And one of the things that even comes up is the passion, right? The passion for, let's say, the idea in place, or the purpose or the cause that the founder is going after, right? Have you seen instances where the passion actually becomes a hindrance?
Absolutely. I think like most of those 1,500 plus situations that didn't go through was because in our minds, when we're thinking of like particular solution, we tend to think that, okay, of course this will work because I went through
Right.
the trouble, and like I would not want to go through this pain next time if I'm trying to do this. The challenge becomes like, would you be willing to pay for it? And like when we think of like an answer to that question, we're like, of course we'll pay for it because it was so painful for us. But
Right.
that testing at a large scale is what effectively startups are trying to do. Like they're
Right.
Paul Graham of Y Combinator once said there's only two purposes for a startup to be for a startup. One is to like capture market share, and the second one is to like stay alive while capturing market share.
Right.
And the question becomes like, what market are you trying to capture a share of? Is that market really existing even or not? And sometimes like a solution in a founder's head might be, yes, of course that market is there and it's large, but it might not actually be there or not be available at the economics that one is assuming, or be capturable in a time frame that makes sense for that startup's offering. So that tends to be like one of the big disconnects between someone like hypothesizing what a addressable market is versus what it actually is. The second thing, and again, I don't want to name obviously specific startups like, that fall in these categories, but another issue sometimes is also that the market dynamics change quite quickly, and you
Right.
get entrants which have a different strategy, and so they might be spending maybe in some cases irrationally, which might make it more difficult for a startup to survive. And the
Right.
question is like, does persisting with that passion at that point make sense, or is it probably better to really take account of what the opportunity versus the cost of capturing that opportunity is, and whether that makes sense to continue, or as you said, that's the right time to pivot. Because I think
Right.
seeing that, and having the vision to kind of predict where a certain space is going is also a key skill for a leading entrepreneur. And I think for them to be able to pivot effectively, they need to be able to again make the case that they understand and demonstrate that their passion is not necessarily around a specific solution that they had, but the passion is more to figure it out and make it work, whatever it takes. And I think that oftentimes will carry them through.
And do you think that applies to Bykea? I mean, it started as a ride-hailing biking app, and it seems to have had a series of multiple pivots over time that have kept it around and kept it sort of growing with, let's say, 700 unique customers, millions of transactions. I mean, for what was a ride-hailing app, basically, and now it's turning into a super app. Do you think Bykea is a good example of the pivot, pivot, pivot until you get it right?
Yeah, I think I would describe it less as a pivot, but more as a base offering that is required to get the riders on board, because the riders are the ones that are going to also then do ultimately different jobs. So back in the back of our minds, it was always meant to have multiple use cases for the same utilization of underutilized assets, which is a motorbike and a smartphone and an individual who's willing to give their time. So we think of this as the ride hailing business as the base, which allows us to have these 700,000 plus paying customers every month, and a base of 60,000 plus riders. But those riders can do a whole bunch of different things. They can deliver stuff, they can move people, as we know, but they can also move payments. And as you're seeing, hopefully in the market, Bykea's cash or to digitization offering is getting scaled very quickly, and in fact will very soon become the largest part of the business, at least from a GMV perspective. And so in some ways, it was important to recognize what the initial hook was in the market, because if we started with just doing the cash digitization offering right now, we wouldn't be able to offer those kinds of jobs to those riders to stay onto the platform, and which then would have meant that you're then subsidizing them or giving them guarantees to just stay on, as long as even if they don't get enough jobs. So the approach that was taken was, no, get them enough jobs so that they are inclined to come onto the platform without requiring bonuses, and then work on increasing their per hour income that they can generate, and that will keep them onto the platform. And I think that's been one of the key secrets why Bykea has worked versus Uber or Careem offerings in the country, because the model did not rely on heavy bonuses to be paid to every single individual that is onto the platform. There's another company that we're not investors in, that I would describe more as a pivot kind of category. I probably shouldn't name it. I'm not going to name it, but I think people can put two and two together. But a certain company that started as a mass transit company, which had slightly different offering, moving to then grocery delivery space. That I would describe as a bit of a pivot, because what your kind of core proposition is different in that in that segment. And when you're pivoting, of course, you then have to the capital requirements for that other side of work is quite different. But in the case of Bykea, we think of this as more of an evolution, where more use cases are getting added to the same base business. And I think we're going to see that base business become a smaller proportion going forward, just because the other use cases are more kind of cash generative, I should say, or or have better margin potential down the line.
So if keeping all of this in mind, right, and understanding and hearing sort of what you've said about a variety of startups in Pakistan, let's say we've got a change in government setup that's come into place right now, and they've got their hands full with a whole bunch of stuff that is wrong with the economy. But if they were to do one thing right, that would enable startups to succeed in this country, right? All startups, doesn't matter what they are. what would that one thing be that you would want them to do?
Yeah, I think one thing they need to do is to allow a lot of the positive momentum and the changes that were starting to happen in the space continue. I know it's like a generalization to say like
Yeah, what does
just
that mean? I was going to say it's a little
yeah.
vague.
Yeah, so I think, for example, just the bits around facilitating capital inflow and also then capital outflow where it's merited, combined with having giving us an opportunity to structure situations and opportunities where interests can be aligned, and local founders can have ownership in companies abroad, and as a result be able to attract capital from multiple jurisdictions as opposed to just
Right.
Pakistan. I think a lot of those things which have already been put into effect, I think they need to continue, because any sort of risk that gets created around an investor's ability to take money out of the country, but can immediately dampen the flows that have been coming in, and I think we can't afford to have such a thing. The other thing I would say is maybe develop a local regime, and in such a way that we would be inclined to set up maybe US dollar denominated funds locally, because right now it's still not attractive enough for even fund managers like us to have purely Pakistan domiciled funds,
Right.
because currency risk, tax considerations, just the overall monitoring and the setup of the structures which require, I believe, still some independent trustees to be on there, which is not necessarily how these setups have worked in other places. And
Right.
so what that does is it keeps us also setting up our funds outside the country, even though they're really focused on Pakistan. So I think that's one thing that can be done in addition to maybe continue this flow of capital coming into the country. But if they don't do anything else, just don't change the things that have been happening over the last few years, because frankly, every government will look good with those. Though
Right.
some of those things that are happening are, and that's why we believe that there should not be too much disruption from this change, which is still a civilian government taking over from another civilian government, because all of this capital, or vast majority of it, is going into the youth of the country. It's going into the highest growing sectors, which are really technology linked. It is increasing FDI, so helping our current account balance to whatever extent, and it's creating jobs. So
That's true.
so the government should just sit back and enjoy the benefits of this, and try to remove roadblocks, because what we are not expecting is the government to start funding these things, which
Right.
is our responsibility to get that kind of funding in place. But they need to act as facilitators, and the state bank and the SCCP have been very progressive over the last few years to bring about some of those changes, and we would want that to
Trend to
continue rather
continue.
than to be stop just because there's a different government in place now.
I'm gonna leave you with my one last question, which I call the $1 million question, and I think that people like yourself, people including myself, we've had to have we've had to take that difficult decision, right? Give up steady income, living abroad, right? And move back and start something, right? And this question applies to a number of people. There could be people here in Pakistan working a very steady income in great companies, but they've always got that lingering feeling, lingering thought, you know what, I want to do something, I want to start something, I want to solve this problem that I know needs a solution, and I have the greatest solution. How do you take that decision to give up that steady income and become an entrepreneur?
Yeah, so this has been the most asked question since I've come back, and there's two variants of this. Well, not two sides of the answer. So just bear with me. In a way, I made a selfish decision. I made a selfish decision because Urdu mein kahavat hai, jungle mein mor nacha kisne dekha. So I wanted to plant a flag as the first professional venture capitalist in the country, and I guess once you're the first, then be the objective changes, then you want to be the last, right? Like you
Yeah.
last one there. But coming up with that decision was for me a little bit of a like, let's weigh up what the opportunity is versus what I would be giving up. So on the one side, I'm like, okay, holy grail is you get your own fund. If not,
Yeah.
you try to become a partner in another fund, or you do some other entrepreneurial venture, or you join a senior position in a Pakistan kind of focused either development organization or some sort of commercial opportunity. If none of that works, then you think about going back to where you've come from and try to do the same line of work but in a different firm over there. If that doesn't work, by the time you're on your seventh or eighth fallback option, you're thinking that okay, maybe your seventh or eighth fallback option is actually going back and doing exactly what you were doing before. And if you've done good work, then hopefully they should give you a conversation. But
Right.
as people, including myself, who chase upside rather than always protect our downside, there's some point at which you got to look at the opportunity that's there. And the opportunity was a completely blank slate. Again, not knowing myself how to do it, but also no one having done it before. So the idea was
Right.
really, you can come and kind of figure things out. And if that works, then obviously economically it could be beneficial as well. So the delta that we think of the cushy life which is possible outside Pakistan versus maybe a tougher life, but can lead to similar kind of economics. But you get all of the other fringe benefits around it, your family is there, your friends are there, you have
Unquantifiable fringe benefits, I call
yeah,
them.
you have this word that I've often used, you have apnayat, in your own kind of country, and you have recognition, etc. And some people say, oh, you have a king's life in Pakistan. I mean, it is a king's life, because
Yeah.
you have a lot of these benefits that you can't put a number on. But also, I haven't said that I don't want to make money, or the making money bit is not possible. It's just that it hadn't been done before, so you need to obviously do things right, and hopefully luck is on your side, and if you're good with people, then they're good with you, then a lot of those things can come together. So for me, to sum this up, I think the people who have the challenge are asking sometimes the wrong question, because they might be making $20,000 a month sitting in San Francisco, and the question they ask is oh, how am I going to make $20,000 from day one in Pakistan? The question is, do you need $20,000 in Pakistan to be able to get the same, if not better, lifestyle? And then you also get the fringe benefits around it. And meaning, what kind of time frame are you giving yourself to kind of get to that point? And whether the outcome can be even better. And I think when we think about that question, at least to me, the answer was it's clear. Pakistan offers growth potential and untapped potential. So the ceiling there is probably even higher compared to the straight path that was available abroad. And it would be a lot more interesting, a lot more impactful, and again, from that selfish perspective, maybe also lead to some sort of legacy.
Right.
And so that was my kind of framework that I used. But it's a very valid question. I think the reason why a lot of people are not able to make that leap is because the perception is you're giving up so much, and because you don't know what you're getting. But I think in my mind, it became clear that what you could get is a lot more interesting than whatever that money was, which was coming on a relatively easier plate.
And I think that's a very valid point. A lot of people forget to quantify the unquantifiable, right? It's they're looking for the apples to apples comparison, and unfortunately, the move from overseas here is not apples to apples. I mean, there's a lot of things that you get which you just cannot put a price tag on, and they're priceless. The apnayat, for example, to your point, is a priceless attainment, right? And so, how do you value that? It's not worth $20,000; worth way more than that. So
Absolutely.
interesting. This was great, Rabeel. Thanks a lot for the time. Really enjoyed the discussion. I got some great insights out of this. I know which sectors are the ones to at least look at in at least the foreseeable future. And I'm hoping that the current setup in the government continues down that path of encouraging entrepreneurship, encouraging VC investments, because not only are you creating income, creating employment, but you're also creating taxable income because most of the VC funded ventures are all sort of white money, clean on the books ventures that end up contributing to the economy in terms of tax revenue.
And you're capturing it all digitally, so it's
And you're capturing it all digitally,
you can't
exactly.
hide it all away. So hopefully
Yeah.
this ecosystem continues to develop. And thank you so much for doing the job that you're doing, and like, you know, bringing some of these stories to the forefront, because I think the number one factor in building any ecosystem is belief in the youth of that ecosystem, that, like, you know, entrepreneurship is a viable career choice, and that if they continue to try and experiment and pivot as much as they want, eventually they can get there, and hopefully we are very much on track to get there.
Good. And I'm hoping that this inspires a couple of people to come out and reach out to you, and you can go from 1,500 to 2,000 after people watch this video.
Yes, absolutely. Can't wait for that.
Great. Thanks a lot, Rabeel. And thank you everyone for tuning in. Bye-bye.